Hello, traders. It is 8:01 a.m. Chicago time on the 16th of October 2018. It is a Tuesday. Thanks for joining me again. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning's sentiment, risk on. We are gapping up in range in the ES and several other products. Overall, and it looks like the 10-year is a little bit lower. Overall, the market's led up by the NASDAQ, up 73 points, 73.25 points, was up as much as 76.5 points or so, or 1%, followed by the Dow Jones up 216 points, and the S&P is up 21.25 points. A pretty interesting configuration right now, given how we closed. The 10-year is unchanged at 118.05.5, and crude oil is a laggard today. Crude oil's off 40 cents. It finished up 21 cents yesterday over Friday's close, and today it's taken that back plus 20 cents, so it's down 0.59%. Along with the Japanese yen and U.S. dollar. The U.S. dollar is down 13 cents. So that's how things are shaping up this morning. It looks like risk is on. A fair amount to say about yesterday's action in the ES, but let's take a look at what's likely to interrupt our auction here. In terms of releases, we're looking at some lower tier figures in the next 10 minutes or so: industrial production, capacity utilization, and manufacturing output. And then we get a 10 o'clock number, 10 o'clock Eastern, the job openings, the JOLTS job opening number for August, low tier, and AHB housing market index at the same time. And then after the close, we get net long-term tick flows and so on. That's at 4 p.m., right at the cash close. So nothing really key today, in my opinion, in terms of releases. We do have Fed Speaker Daly is a voter at 4:15 Eastern, and that's about it. The market is definitely looking up a little bit. Let's take a look at what we expected yesterday in our review. Yesterday, as you can see, a mess of stuff. Really, it's just the way we were setting up, the way we're opening right at 2765, 2764. I could see some support, a little bit of support underneath us, potentially at 2760, although that's well within the first rotation's range. But I didn't see an edge to any particular direction. The prior day on Friday was a higher low, lower high, an inside day, and then we ended up with another inside day. So overall, I can't say, it looked a little bit like scenario one, but the figures didn't work out that way. It was very, very choppy yesterday. I actually didn't see many scalp opportunities early in the day, but as the day wore on, things started to shape up a little bit. Here's what we actually got. We dipped, push up, we extended the range up, pulled back almost to the IB low. Looked like it may go neutral given the size of the bar, of this bar, and the volume that went into it. And then it drifts up, puts in a higher high, higher low, higher high, and then it breaks lower. There was news there out of Saudi Arabia and so on, and we ended up finishing neutral on the day, and technically the finish yesterday was neutral extreme. We closed at 2748.75 with the low being 2748.50. So with that being said, my expectation is that we're likely to drift down in the extended hours, and I actually was expecting it to open down into the 38.50 and potentially 32 area this morning, and that was completely wrong as well. So what we had yesterday was another inside day. We missed the prior day's high by one tick, if you haven't noticed. So we've been one-time framing down, clearly given last week's sell-off, and we've been putting in lower highs, and so we've been one-time framing down. And my expectation yesterday is that we're likely to challenge that one-time framing down and push the open or push the high a little bit. This is the overnight session here. The overnight session shows that we basically have a double bottom with the prior session. So the prior overnight session, Sunday night through Monday my time, had a low of 27.45 and a quarter, and then last night we put that low in again and then just basically drifted up from there in this channel. The volume is falling back into line. It's a little over twice the mode, twice the mode of the extended hours volume over the last since 2015, and so we have okay participation still. The overnight inventory is mostly long. We spent a little bit of time below the close, but price shows that inventory is mostly long, and so does the delta. So you could see with this profile here, we have a kind of a spaceship type of profile. It's a triple distribution profile with the point of control right in the middle, with VWAP and mid. So overall, we've extended in the last hour or so. We've continued to extend up. It looks bullish. We've pushed into the prior day's value high already at 70.50, with a high of 71.50 overnight, and we're standing by as we approach the open. So the overnight session is telling us that the selling that took place yesterday, all of the selling that's taken place yesterday, we've taken much of that back. We're beyond the 50% mark of yesterday's range, and we're likely to continue higher and challenge this high at 78.75. So again, today my expectation is that we're likely to take out, to stop the one-time framing down. The one-time framing down looks like this. So we've sold off, okay, and we've come back into, as I've shown over the last several days. Where is this profile? We've come back. So this is important to me. This here, we are basically balancing out at the most valuable price, or the most traded price, since the fall at the beginning of the year. So this is this 27 area is the most traded price since in 2018, and we're kind of hovering around it. And when we zoom back in and we look at how has the price action been, we see that there's a breach bar here that breaks the one-time framing down. So this is one-time framing down. We get a breach bar the next day. If we push through, then my expectation is new highs, and we didn't do that. We ended up getting a breach bar and then resuming the selling, the big selling days that we had last week. So now we have one-time framing that began with that day, continuing with the second day, third day, and then yesterday, fourth day, by just a tick. And to me, this looks like it is really trying hard. I mean, we're opening and selling low, finishing lower. We're opening and finishing lower. This day had a big excess on the daily. Yesterday, we opened, we tested higher and finished lower. This is why I was expecting us to be lower today. We tested higher and finished on the low. This is normally pretty bearish, but this morning we're trading at 27.72 currently, and we are much closer to the upper end of the range than the lower end at the moment. We are fighting this 20-day, this 200-day moving average. We're below the 50, and so overall, the market is set up as bearish. However, there's a good opportunity to, again, as I talked about yesterday, there's a good opportunity for a trip to 2,800 and 2,807, and I'm looking for that to pull back for a strong short, at least, on the initial test, and then a rotation back down. Whether it continues lower or not, who knows? But what we have is consolidation here. This is really compressing, and since it's compressing, we put a profile on it. These are inside days. We put a profile on them, and we can see the 2768.50 is the point of control, and the shape of the profile. Let's turn this into a kind of a burning red profile. Actually, let's extend this width to 100% so we can see it. So you can see that it's built quite a bit of kurtosis here, quite a bit of consolidation. We're likely to break higher today. Okay, just be careful on on the way up if you're getting short. Is the point? What are we looking for today? Where are my sigmas? So the second sigma, volatility, close to close sigma is at 2802. So we are relatively within range. So overall, the primary scenario, we do have a long overnight inventory. The primary scenario, open auction, we're right on the edge of value. I'm looking for it to drop into the point of control. It's 2765. Struggle down into 2761, 60. Remember 60 from yesterday. This is the low volume node that we battled at yesterday. And then I'm looking for an impulse through, consolidate, and then I'm looking for one-time framing to stop. I expect a quick spurt. When that happens, I'm looking for a stop run up here into 88.50, consolidate, and potentially drift into 27.99 on the way up. This is basically the same plan as yesterday's scenario one. It just didn't take place yesterday, so here we are playing it again today. Okay, secondary, open auction that just drifts up, tests the prior high, has a quick spurt, and then we get an impulse down, which brings us back into balance, 2765, 2760, and then testing the range all the way through to 55, 54 for value low to finish in the middle. So this will be a breach bar that falls back into the range, a weak breach, so to speak. That's the secondary scenario. Okay, the third, open test drive, open test down, drive up. Fourth, open test up, drive down, and so on and so forth. When we see a drive, we get out of the way and we trade from the other side. Good luck today. Hopefully you're gaining something every day. At least you're seeing the same routine play again and again and again, and that's really supremely important for traders to follow a routine. Just make it your own. Make sure you're trading your own plan. Good luck, and I'll catch you tomorrow morning. Take care.